Global IT outage, the US president stepping down from the election rally. That was some week. What does this week have in store for us? Stay tuned to find out more. So it was a weaker day for markets on Friday after a global IT outage affected many sectors from airlines all the way through to hospitals. The issue was the result of a glitch rather than a cyber attack. So the issue appears to have been in large resolved, but there are certain sectors which are just seeing a slight delay in terms of getting back up and running there. The weekend also saw President Biden, who stepped out of the 2024 election rally, passing the baton onto Vice President Harris. Decision really to reinsert some energy back into the campaign rally. And we've seen over $50 million worth of donations go to the Democratic Party to really have a final push into November. The reaction's been fairly muted. We've seen a weaker dollar. We've seen bond yields which are slightly higher on the day, but as the US equity market opens through the course of the day, we'll see a bit more information in terms of how people are considering this. As we look through into this week, we've got a number of economic data prints which are going to be important. We've got economic growth data for the second quarter. Now, what the market's expecting to see is the economy grow by around 2%. So that's up from 1.4% in the first quarter. If we see that, that will be a very strong result. And it's consumer spending which is expected to have a large contribution into this. We've been discussing the health of the US consumer and how important they are for sustaining the growth rates which we're seeing. We're also expecting to see the PCE print, which is the inflation print. And in this, we're expecting a slight uptick of around 0.1%. And largely driving this, again, will be consumer spending. So we're recognizing that the consumer's key for economic growth, but it also has an inflation aspect to consider there. So we'll keep you updated on the inflation trends which we're seeing. We're also going to see, in terms of the historical data, some corporate earnings prints from some of the titans of the US, some of the biggest industries in the world. Microsoft, Alphabet, Tesla, Coca-Cola. These are going to give a really important insight in terms of how businesses have managed through a period of elevated interest rates and inflation which has been coming down but uncertain along the way, and importantly how they're thinking about their future. How do they expect their revenue to grow and how do they expect their profits to grow? We'll also get an indication in terms of any signs of investment, if they're looking to take on workers, investment in areas such as artificial intelligence. We've also got the Purchasing Managers Index. This is a leading indicator of private businesses and it gives you a real sense in terms of sentiment. How are they feeling about the economy in the near term, but also further out as well? We'll get a similar read in terms of Purchasing Managers Index from Europe as well. Europe, we've been discussing some of the volatility in the data which we're getting, especially in regions such as Germany, one of the key manufacturing hubs. So what we're expecting to see from Europe is manufacturing data which is still in contractive territory, but the rate of contraction is actually slowing. It's starting to look a little bit more positive there. At the same time, the service sector looks very resilient. So a number of data points for us to discuss through the course of this week after what was already a busy week last week. So please do, if you find this information useful, stay tuned, dial in and like and subscribe to the YouTube channel. Thank you very much for watching. Look forward to catching up tomorrow.